I want to talk to you about all the forms that you need to really pay attention to when you think about 401k and into this conversation. So, here's an overview I want you to first pay attention to. So, when you think about 401k tax forms, you need to really think about the 401k retirement account. And so, we have a Form 1099-R, of course. We have a Form 1099-INT in some cases. It really depends upon your situation. But the bottom line here is that before you actually delve into the details of the 401k tax form, it's really essential to understand the basics of a 401k plan. I'll quickly just talk about that. So, a 401k plan is really an employer sponsored retirement savings plan that allows employees to contribute a portion of their pre tax income to a tax advantaged investment account. And this is basically, this is kind of straightforward. So, those contributions can grow tax deferred until retirement, providing individuals with an opportunity to accumulate substantial savings over time. So this is kind of cool in terms of maximizing your retirement benefits. And what happens here is that under a 401k plan, employees can contribute a portion of their pre-tax salary or wages into an individual account, which is then invested in a selection of investment options provided by the plan. And the plan is actually managed at a different level. And so the contributions made to a 401k plan are tax deferred, meaning that the employee does not pay taxes on the money contributed or on any investment earnings until he or she withdraws the funds during retirement. What I want to say here is that when you have this constellation of facts and scenarios, this is really good because you are able to grow your retirement accounts. And when we talk about eligibility and importance, you have to understand, when we talk about the 401k tax form, this is commonly the form that we call the Form 5500. This is an informational filing that employers must submit to the Internal Revenue Service and also to the Department of Labor. So every company that has a 401k plan has to send Form 5500 to the IRS, but also to the DOL. And the form provides a detailed overview of the employer's 401k plan, including information about plan participants, contributions, investments, and compliance with the regulatory requirements, because the 401k plan is pretty straightforward. And so the IRS and the DOL wants to make sure that companies are actually abiding by the appropriate rules. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So let's quickly dig a little deeper into the 401k tax form. So you have Form W-2, so you can see on the screen here. So Form W-2 is actually provided by the employer, and this form reports the employee's wages, salaries, and other compensation. And it really includes information about contributions made to the 401k plan, such as you have elective deferrals and any employer matching contributions. So this is pretty good in terms of helping you analyze what really works for you. And you also have a Form 1099-R. So if the participants received distributions or withdrawals from their 401k accounts during the tax year, this form is used to report those distributions. It really it's pretty straightforward also because it provides information about the amount withdrawn, any taxes withheld, and the reason for the distribution, such as retirement, disability, or early withdrawal. So this is this is pretty straightforward also. And so this is a Form 1099-R. You can see this on the screen here. So Form 1099-R. And also the third form that I just spoke about earlier, that's a Form 5500. So this form is typically filed by the plan administrator or a sponsor and provides information about the 401k plan's financial activities, such as contributions, investments, and expenses. And so this form is actually filed by employers, not employees. So it's not typically filled out by individual participants. I want you to, the thing is, as you can see on the screen here, you have the ability as an employer to file this form actually electronically. So this is kind of cool. So you don't have to really fill out any form at all. And you also, any form manually, if you will. You also have a Form 1099-Q. So this is another form that's really important. Form 1099-Q. And so if there were distributions from a designated Roth account within the 401k plan, this form is used to report those distributions And so the form provides information about the amount withdrawn, any taxes withheld, and whether the distribution is qualified tax-free or non-qualified, in other words, subject to taxes and penalties. So you can see on the screen here, this is a Form 1099-Q. You also have a Form 8880, so 8880. So this form is actually used to claim the retirement savings contributions credit, also known as the Savers Credit. So this is kind of important. Now, eligible individuals who made contributions to their 401k plan may qualify for this tax credit, which can really help reduce their overall tax liability. So I want you to look on the screen here. Here is how this form looks like, Form 8880. So this is kind of straightforward here. Boss, I want to quickly remind you of today's topic. We are having a conversation about all the forms that relate to 401k, and I just want you to have a clear idea what you really need to prepare if you want to go that route. Let's dig a little deeper here in terms of all the step-by-steps you need to follow if you want to file 401k tax forms. So it's important to always gather the necessary information because everything starts with you paying attention to the data on your Form W-2, your Form 1099-R, for instance, your EIN in some cases. I mean, you got to think about your financials. This can be if you are filing as an employer, you got to have your financials, your income statement, balance sheet, your cash flow statements, and in some cases your owner's equity statements. If you're an individual, you want to pay attention to Form W-2, 1099-R, 1099-Q in some cases. So you also want to obtain the appropriate tax form. You have to see what really applies to your situation. Again, I showed you a series of tax forms that relate to 401k. So from 5498 all the way to 8880, you have to see which one works for you. And you want to report contributions. So when we talk about reporting contributions, we're talking about you being as granular as possible. So on the appropriate section of the tax form, you want to report the total amount you contributed to your 401k plan during the tax year. This information may be found on your paid stubs, your W-2 form, or on the statement provided by your employer or retirement plan administrator. So it's one of those things where you have to see which one works for you, okay? But the bottom line here is that you want to be as granular as possible so that you are able to comply with the appropriate tax laws. One thing I also want to say here is that when we talk about reporting contributions, we're talking about reporting contributions for the full year. So from January 1st all the way to December 31st. This is not just something you have to do 1 year, but you have to do it all throughout the years. And the bottom line here is that you need to really know exactly what really works for you, for your specific situation here. You have to really always pay attention to here is that it's all about distribution. So when we talk about 401k, you have to understand that the IRS plays an important role. The IRS actually pays an important sort of attention when it comes to the distribution that we're talking about. So we're talking about distributions, but also withdrawals. So when you have distributions or withdrawals from your 401k plan during the tax year, you have to report those amounts on the appropriate section of the tax form. And so in this case, you have to use a 1099-R. And this is actually typically issued by the financial institution managing your retirement account. And this can be an insurance company, it can be a bank, it can be a brokerage account, it can be a brokerage institution. It really depends. And so you have to report distributions. You have to consider additional tax credits or deductions. But this depends on your circumstances, though. And so you may be eligible for certain tax credits or deductions related to your 401k contributions. And let me give you an example. Let's say you might qualify for the retirement savings contributions credit, also known as the Savers Credits, if your income falls within the eligible range. And it's one of those things you want to see what really works for you, okay? And so once you actually have a clear idea about what works for you, you want to review and submit. So, it's you want to complete all the necessary sections of the tax form. You want to review all the entries for accuracy. You want to sign, you want to date the form. And if you are filing electronically, you want to follow the instructions provided by your tax preparation software or online service so that you know exactly what really works for your specific situation. So, but every situation is different. If you have any question, please let us know in the comment section. We'll be able to explain things to you further because When it comes to 401k, when it comes to withdrawals, when it comes to distributions, every situation is different. And I'm not even talking about the state's implications of it, because see, you might be thinking, well, this whole conversation is about the federal part of things, but your state might also have a specific rules when it comes to 401k, when it comes to retirement planning in general, and the tax implications that really come with it. Now, granted, a lot of states want to follow the IRS's footsteps when it comes to tax compliance, but some states actually are pretty unique when it comes to the way they analyze tax situations. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about 401k tax forms. Let's talk about some common mistakes that you need to avoid while filing 401k tax forms. It's really important to really understand that when you pay attention, when you actually are thinking about filing your 401k tax forms, you want to double check your information. We're speaking here about your name, first name, last name, your social, your address. So you want to make sure all those things are accurate, and you want to also make sure that you comply with the deadlines. No missed deadlines here, because missing the deadline may result in penalties or even the loss of certain tax benefits associated with your retirement accounts. This is something that you really want to pay attention to. So this is important. And also inaccurate contribution reporting. So ensure that you accurately report your contributions made to your 401k plan during the tax year. So we want to talk about you checking your year-end statements and Form W-2 to ensure the figures are matching. Okay. So mismatched or incorrect contribution reporting can lead to a lot of things, including discrepancies and triggering audits. So you do not want to have that, because the bottom line here is that you need to see what really works for you. And also you want to report distributions accurately. So if you took any distributions or withdrawals from your 401k account during the tax year, make sure to report them accurately. So we are speaking about distributions from a 401k that are generally taxable unless you qualify for an exception. And this could be qualified distributions from a Roth 401k in some cases. And also, one thing I want to say also is that you want to pay attention to the RMDs when it comes to 401ks and pensions in general. RMDs are really important because RMDs stands for required minimum distributions. So if you are over the age of 72 or 70 and a half, if you reach that age before 2020, you are required to take annual minimum distributions from your 401k accounts, and failing to take or report this RMDs can result in substantial penalties in some cases. And so it's one of those things where you do not want to have the wrath of the IRA. And also incorrectly calculating the taxable amount. So if you made any pre-tax contributions to your traditional 401k, withdrawals from this account are generally taxable. So be sure to accurately calculate the taxable amount based on the proportion of pre-tax and after-tax contributions in your account. So it's one of those things where you have to really see what really works for you. One thing I want to say here is that you have to really see what kind of contributions you are actually going to report to the authorities. Another area you want to really pay attention to is neglecting to claim eligible tax credits. So when we talk about 401k tax forms here, you want to really be on the right side of the law, right? And the bottom line here is that you need to there may be certain tax credits or deductions available related to retirement contributions or savings, and so you want to ensure you explore all potential credits, such as the savers credits that could reduce your tax liability. So that's kind of important in terms of allowing you to have the proper how do I call it, the proper tax liability, but the proper context. And also do not ignore state specific rules. So remember to consider any state specific rules or requirements related to 401k accounts. Every state may have its own regulations and tax treatments of retirement accounts. So be sure to understand and comply with them at the right moment. That's one thing I want you to really pay attention to, and it's one of those things where you have to see what really works for you. And it's one of I give you a series of mistakes that could actually potentially cripple your 401k tax filing. And the bottom line here is that you want to make sure that you avoid those mistakes. Now, if you know what you're working with, if you understand a little bit about taxes, you can do things yourself. But if not, it's just always better to actually consult with a tax professional, or you can even use reputable tax software to guide you through the process so that you are clear as to what really works for you and what doesn't work for you. Okay, let's let's quickly talk about the filing deadlines and extensions here. And one thing I want to say here is that when we talk about 401k tax forms, you have a series of forms, right? And but the bottom line here is if you need additional time to file your tax return, you can really request an extension, and this extension gives you an extra 6 months to file your return, moving actually in some cases the deadline from April 15th all the way to October 15th. And but to request an extension, you can't do it automatically. You have to file a form called a Form 4868. So 4868, application for automatic extension of time to file U.S. individual income tax return. And so once you have that, once you file that with the IRS, you are automatically granted like 6 months from the date you are actually doing like from the date you have filed a form. One thing I want to say here is that it's one of those things where even if you file the form even if you file the extension electronically, you'll still have to make the payments if any payment is due by the due date. Let me close to this conversation by giving you a few tips for maximizing your 401k tax benefits. And you have to understand that 401ks can grow tax deferred until retirement, providing you and all kinds of individuals with an opportunity to accumulate substantial savings over time, right? And so there are a lot of things you can do here to maximize your 401k tax benefits. And so what you want to do first is that you want to contribute up to the maximum limit. So you want to aim to contribute the maximum amount allowed by the IRS every year. And so that amount actually is a moving target. So last year was 20,500, and it was 27,000 for individuals aged 50 or older. So by contributing the maximum amount, you actually are maximizing your tax deferred growth potential and potentially reduce your taxable income, which is really good because you're basically deferring all the benefits to a future years. You also want to take advantage of employer matching. So if your employer offers a matching contribution, you want to contribute at least enough to receive the full match. So employer matching is essentially free money that helps you save for retirement. So this is kind of cool in terms of giving you the opportunity to do things that really are important. And you want to consider in some cases Roth 401k contributions. So you want to evaluate whether contributing to a Roth 401k makes sense for you. And the cool thing here is that it really depends on the situation because Roth contributions are made with after-tax dollars, so they will not reduce your taxable income in the present. However, qualified withdrawals in retirement are tax-free, including both the contributions and earnings. And this can be, when you really think about it, this can be really a beneficial if you anticipate being in a higher tax bracket in retirement, or if you want tax diversification in your retirement savings. So this is kind of important to really think about. And another way to actually have things done also is to review and adjust your investment strategy. So you want to regularly review your investment options within your 401k plan, and you want to evaluate your asset allocation. Okay. Now, whatever you do, you always want to consider your risk tolerance, time horizon, and retirement goals when making investment decisions. Okay, you want to adjust your portfolio as needed to ensure that it really aligns with your objectives and provides the potential for long-term growth. It's one of those things where you have to see what really works for your specific situation at all times. Thank you so much for your attention. I really appreciate it. Let me quickly do a recap of today's conversation. So I spoke to you about 401k tax forms. I gave you the overview, and I also gave you now the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay Marvelous.